This is Rod Kusin, the Spoos for Risk. On September 1st, 2016, all times on the Charter Central Standard Time, we're going to run a little bit of a commentary that will take us back to the 26th of August to kind of get a little context to what the premium has been telling us all along, and we'll look at its accuracy. Now, despite the fact that there are some major support levels as shown by market profile, which we will address in just a couple of minutes, let's just look at what we saw happening on the 26th. Now, when we saw this initial drop on the morning of the 26th, we saw the premium drop way down. And let's just presume, for the sake of argument, that our low threshold on the premium was set based upon this drop. So that means that when the premium dropped to a negative 301, it served as the threshold from which we would anticipate that, if we hit a new low on the ES lower than the price associated with this drop, and the premium is higher, the lower the premium is greater than a negative 301, that we will then find support and the market will move up. Now, nevertheless, the market moved up right there and moved up handsomely, but by the time the day ended, we had dropped right back down to where we were before. Okay, and at that time we dropped down to 60.75. Okay, so we had a major drop here, rally up, and we talked about that in some previous videos. Fibonacci move up 200% extension. But we had this very low premium, which was in and of itself predicted. We've talked about that before. But let's presume that that was the threshold. So if we drop below that, it suggests that we're still going down. So when we came down and we hit this low before the noon hour, the premium at that time, as you can see, was well below this low threshold, indicating that this move down isn't over. And by the time the day moved into the early afternoon, we had hit our low right in here, and you can see where the premium was. Premium at this point in time is now above this lower threshold, and it is right at that moment, and this is a 10-second chart. Right at that moment, this market began to retrace up. Now, there were some harbingers of that on the premium, which we're not going to take the time to talk about right now. But there we saw this nice move up, and that's basically the concept of the premium, which you see working very effectively right in here. Now, let's take us into the 31st. And you can see what the premium was doing on the morning of the 30th. And these nice drops in the premium were in and of themselves very predictive. Big drop here, 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 big drops. And this market is continuing to go down. So when we come to the first low on the 30th, all right, which is right in here, where was the premium? All right, let's run our indicator at 931 so we can find that number. We'll just go over here, set this to 931, and it identifies negative 164 as the low of the premium at the moment of that pivot. So what that tells us is that if the premium drops below this level, particularly if it hits that same price, and the premium at that time is still lower than negative 164, then we're still going down. All right. So let's just set up a price line here, just as a point of reference. 71.51, and you can see how the premium bars are responding. They're getting very negative into the noon hour, all predicting that this thing is going to drop. And there you have it. Okay, so it continues to drop. Now, she drops down to this level. Roughly, and begins to rally up through the balance of the afternoon. But what does the premium say? The bar associated with this low right there, okay, look at how low the premium is at that moment. It is way below this threshold. What does that tell you? It tells you that whatever move up takes place needs to be shorted, because this market's coming right back down. And what do you see happen on the next day? We gap down, and within the first hour and a half, we've dropped below that level. Now, how far down was this going? Well, market profile was beautiful. And let's just take a look at that. This is a very, very easy market profile. Oops, calculation. Let's get rid of that screen, pardon me. Come on, folks. Okay, so before the 31st, you could see the point of control at 59.50, and there's a subsequent low value area at 55.25, and that's all being calculated prior to the 31st. Right, that's all the volume prior to the 31st, to a particular date in history that we had selected, a recent one. And what do you see happen on the 31st itself? The market comes smack dab right down to that point of control. Right there at 59.50. Okay, right there. Just to be specific. Okay, so that was real easy to see just based on where the market profile was. So now let's go and recalculate the premium and see what it tells us. So we're going to go back to the beginning of the day, and we're just going to look at a couple of these lows. Now, if we took this first low here, and let's again just presume, for the sake of argument, that this is a legitimate threshold, because this is a pretty low reading on the premium. Then if we go lower and the premium is still hitting a lower low, we're still going down. Look at what happened. Now this is somewhat random. I'm not saying that this is the accurate threshold, but even if it was, when you came down here, where was the premium? Premium was right down there at -2. Okay, that's your low. It's -2.00. And where's this line being drawn at? -1.99. It's a little bit lower. Okay, not by much. And I would say that under normal circumstances that difference is insignificant. But that's not a real accurate picture of the premium. Not really. Just because of that low, that's not what we would normally expect the low threshold to be. But even if it was, the premium was still lower when we hit 59.50. Not by much, but it still was lower. A more accurate picture would be where the premium is when we get down to either this low. In that case, it was at negative 186. Okay, or how about this low? At that time, it's at negative 168. Or what about this low? It's at negative 166. Or what about this low? Way down here. Okay, look at this. Okay, let me expand this so you can see. If we come to this pivot low, premium low is at negative 186. If that's an accurate threshold, okay, and then we come down here to this pivot point, which is the low of the day, it's, slams right into 59.50. Is it any wonder that it rallied? But the premium says we're still coming back down. No two ways about it. The premium gets to be that low compared to any even reasonably accurate threshold. It's still way below. Way below. All that is telling you is that regardless of what happens thereafter, this thing is coming back. And that's exactly what you see happen. And this time it comes back with vengeance. Now, once again, let's take a look at the composite market profile. You drop below 59.50, where's this thing going to rethink where it's going? It's got to come down to this low value area at 55.25. And yes, indeed, that is exactly what we see taking place here. The market did in fact drop before it resumed the rally back up, came all the way down to 54.75. Okay, that was today. That was September 1st. So, right within a couple of ticks of this low value area. And that's fairly normal. But what did the premium say? All right, what did the premium say? Now, let's go back and take a real close look at what's happening on the 1st of September. So we're just going to look at the lows here. So as the market makes its initial move down this morning and hits this pivot point here, the premium low is at negative 223. All right. When it drops a little bit lower, where's the premium at this point in time? Okay. Right in here, we can line this up. Let's expand this out so that we see this a little easier. Okay. So at this point in time, the premium is lower. What does that tell you? Studying the premium with us, you know that that means that this market is going to continue to move down. And when it does, over here, where's the premium again? It's still lower. Now, at this point in time, the low threshold is at negative 215. Okay, so we get this little move up. But overall, this big bar on the premium here, that's a pretty good harbinger of a down day, at least for a good portion of it. And from that point, just look at the slope. Look at these lows, lower low, lower low, lower low. Then we move up rather quickly here. We get a little bit of a move up. Now, is that the accurate threshold? It could be. Negative 215 could be an accurate threshold. So we're going to presume for a moment that it might be. But we're also going to presume for a moment that 223 might be. It doesn't matter. But very soon thereafter, as this market continues to drop, you see where the premium is. It's way below both of these. And we come into this low, we're way below. So we're not, this move is not over. Then we come into this little pivot here. It's obvious. We're still not done with this drop. Okay? And that's what the premium tells you. Okay? We're way below. The premium is telling us we're still coming down. Now, we come to this point. 54.75, that's the low. Where is the premium? It is way below these thresholds. So what does that tell you? Okay, traders, what does this tell you? It tells you that 54.75 will be tested. So regardless of this move up, the premium says we're coming back down. Now, I'll hand it to the traders that the 55.25 low value area was a good place to take a long trade. No two ways about that. But you still have to be aware of what the premium is saying, especially if you're holding a big position overnight, which we don't do. But nevertheless, you see the market. The market is nice rally up. That's fine. But don't fool yourself. Premium says we're coming back down. And there's just no two ways about it. That's what the premium says. Now, we always recommend to our traders that when you're trading the premium, you keep track of what the trend is doing. You got to know what the trend is doing, and you got to know what the other portion of the premium is also telling you. We haven't even talked about the highs, but I just want to put you all on guard. Premium says we're coming back down. So that's our synopsis. If you'd like more information about the premium, how we read it, come take a demo. You'll find out that the methods that we are using are, well, they may not be perfect. Nothing is, but they're very compelling and very helpful in aiding our traders to know how to anticipate moves in the market, particularly based on what the premium is telling us. Once you learn how to read this, you don't need any other indicators, but we will teach you how to use indicators to help you get through that initial part of reading the premium, having confidence that really the premium is the single best indicator that there is to know how to read the market and the moves and the pivots and so on. But you've got to understand the process. You got to understand how the premium works in such a way that it can tell you that information. So come take a free demo and then get on board with us. You'll be glad you did. I'm Rod Kusel, the Spoon Man for Risk.